Kia ora and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston and this is the international edition from interest.co.nz. And today we note the news will be dominated by the vile attack in Sydney. Extremism begetting extremism, all permitted by unfiltered hatreds flowing out from its centre. Financial news seems trivial in light of all of this. Of course, we won't be covering this Australian tragedy, but it is likely to harden attitudes just when they need to soften. In the meantime, we're noting tech weakness dominating equity markets and Fed speaker comments pushing long benchmark bond yields higher. The US dollar is soft and down nearly 1% for the week. But first, the week ahead will locally feature Wednesday's current account data and more so Thursday's GDP tracking of the third quarter 2025 economic activity. The final consumer and business confidence surveys will likely come this week too. In Australia, on the economic front, it'll be about tracking household wealth, also out on Thursday. In the US, they'll release catch-up data for non-farm payrolls on Wednesday for both October and November. That'll be followed by November CPI data. A slew of other US activity data will hit the news as well. In Japan, financial markets will be glued to their central bank meeting results, with a 3% CPI reading also due. From China, they'll have their big monthly data dump of retail and industrial activity. In India, they'll release a lot of data too, including PMIs. But then we'll get PMIs from many other countries, including our own, PSI as well. Over the weekend, China said its new loan demand remains unusually weak, and in November came in even lower than the weak forecasts by observers. Chinese banks extended 390 billion yuan in new loans, up from the unusually low October level, but still below both last year's weak 580 billion and the market expectations of 500 billion yuan. Soft household demand continues to weigh on stimulus efforts. Remember, over the past 5 years, this loan demand has averaged 830 billion yuan in a November month, so the current drag is notable. And it is looking increasingly like investors, including boardroom directors in charge of making capital expenditure decisions, have gone on a quiet strike in China. And staying in China, things got worse for wavering China Vanke on Friday, once one of China's largest property developers. The Shenzhen city control business was unable to get bondholder support for its latest financial restructuring, so current lenders took more of its assets as security. And India's CPI inflation remains very low at 0.7% in November from a year ago, up from its record low level in October though. This was driven by an almost 4% fall in food prices. And India's bank loan growth is up 11.5% from a year ago in its fastest expansion this year. In Malaysia, both their retail sales and their industrial production expanded at an accelerating pace in October, in data released over the weekend. In Japan, it is becoming clear from company financial reporting that the Trump tariffs on Japanese exports have backfired. Japanese companies raised their prices after the initial tariff hit, the Americans paid the higher prices, and when Washington backed away from some of the more extreme levels after negotiation, those hiked prices didn't retreat. They stayed up and boosted company profits. The picture was probably similar elsewhere. The ultimate losers have been the American buyers. American reshoring has been weak, so much so that one Fed member is now more worried about jobs than inflation. Canadian building consents surprised analysts with quite a surge in October, especially residential consents for multi-unit buildings in Toronto. That drove an outsized 15% national gain from September to be 19% higher than a year ago. On an annual basis, residential consents are also up 19%, with Ontario up more than 28%. The US Treasury 10-year yield is now at 4.20%, unchanged from this time Saturday, up 6 basis points from last week at this time. And the price of gold will start today at $4,299 an ounce, up $5 from Saturday, up $84 from a week ago, and back near its mid-October peak. And we should also note that silver is unchanged at $62 an ounce. American oil prices are holding at just on $57.50 a barrel, while the international Brent price is down 50 cents at just over $61 a barrel. Both are $2.50 lower than a week ago. Separately, it's very noticeable that the North American rig counts are still languishing near their 4-year lows. No one is rushing to invest as prices and demand stay very low. And the Kiwi dollar is 10 basis points softer from Saturday, now just over 58 US cents. But it is up 30 basis points from a week ago. Against the Aussie, we're unchanged at 87.2 Australian cents. Against the euro, we're unchanged too at 49.4 euro cents. That all means our trade-weighted index starts today at just under 62.2 and up 10 basis points from Saturday, up 20 basis points for the week. And the Bitcoin price starts today at $88,831 and down 1.6% from this time Saturday, and essentially unchanged from last week at this time. Volatility of the past 24 hours has been low at just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.